Hey, it's Clay at ClayTrader.com. This will be the weekly review of the Power Profit Scan newsletter, which is a portion of the Inner Circle subscription that I offer here at ClayTrader.com. First off, a couple disclosures. Am I trying to imply that every alert I send out is a massive money-making success? Absolutely not. I am not perfect. No scanner is perfect. There is no holy grail. But what I do want to illustrate and what I do want to just kind of reiterate and show is why risk management, risk control, risk analysis is so important to us as traders. Because yes, losing trades happen, but on the flip side of the coin, winning trades also happen. So when those winning trades do come along, you need to ensure that your account is in the best possible position to succeed. And I hope to illustrate that here. The other disclosure, as far as what we're going to be going over. So like I said, we're going back to the weekly newsletter and going to go look at the week of July 1st. Clay, why are you going so far back? Fair question. First off, it's just a matter of giving everything plenty of time to play out so we can see what's actually happened with the chart and the price of each of these stocks. And second, simply a matter of being fair. This is a paid subscription, so the last thing I would want is for somebody to pay for something, and then all of a sudden, oh, look, it's out there for free for everybody to see. That person would be totally justified in feeling ripped off. So just a matter of giving everything plenty of time to play out and then being fair to those paying members. So with that being said, let's get to it. Now, I always do read YouTube comments, so I know from feedback this always kind of helps out, and it's been a while since I've done this as it establishes some context, but let's look at some of the best CD rates out there. So CD being a certificate of deposit, and you can see down here, this is, comes from NerdWallet, but all sorts of different, rates out there. But let's just look at, 1 year. So 1 year, 2.5%. How about a 3 year? 2.6%. 5 year, 2.8%. And that's, the best out there right now. Again, so 2.4%, 2.5% for 1 year, 3 year, 5 year. So let's just call it 3% to keep things easy. So 3% for 1 year. Just keep that number in mind as we go through the results there. And that way, it's always good, a baseline of kind of keeping things in context. So we'll just round up to 3%, call it for 1 year. Before we go into the first alert, couple questions I always get. Clay, what price range do you cover? I cover all price ranges. I really don't care about the price, and I say that because I care about probabilities, odds of success. Those are my driving forces behind putting together any sort of alert that I send out. Is yes, I try to scatter the prices all over the place, but that's not going to be. I'm not going to force myself into a corner because I have to do a certain price area. No, I'm going to focus on what I think has the most odds and probabilities of producing a winning alert. Second, when are these sent out? These are sent out over the weekend, so you have plenty of time to think about things, look over things. It's not like you get some text alert and then you have to run to the bathroom at work real quick and put in some sort of trade. Nothing like that. No pressure. You have plenty of time to think through everything that is sent to you as a member. So the first alert to focus on here is DPW. And as you see from the, kind of the title of the chart, I gave it volume leading to more of a breakout. Very clear. There is big volume. And now the question going into the week was, could the price break through that 37-ish area? So let's see how this one played out. One quick note. Yes, the share price is much different right now. That is because DPW has gone through a reverse split, which if you're maybe newer, reverse split just means that there has been a change in the share structure. Everything else though stays the same, and that's the powerful thing about technical analysis and charts is the chart just changes proportionally. So all the patterns, everything is the exact same. Thing is just the price of the shares have been changed around here. So just keep that in mind. It's not like it was an explosive move, just a matter of a share structure change. So let's see how this one played out. Remember, you were looking for the break of that area up there at the red line. And I'll just kind of go quickly. Nothing ever played out. You can see the price never got really close to breaking through there again. And since then, it's just only drifted further and further downwards. So that's one of these setups where, yeah, sometimes nothing happens. And as traders, just because you put together a trade plan, just because you run your scans and everything and find something that looks like there's potential, keyword is potential. Doesn't mean that there's anything that's guaranteed to happen. And that's okay if nothing happens. That's just, again, part of being a trader. And, sometimes you'll just have a quote unquote no play, as I like to call these, because there's no action that, should have been taken based on the idea behind your trade plan. And the idea behind this one was looking for some sort of breakout. And yeah, the thing never broke out. So no harm, no foul. It just simply didn't play out. Next one we're going to take a look at here is ticker symbol GERN. And really just was all about, the bearish engulfing candle that happened and wondering, hey, you know what? A lot of bearishness here, big volume. Can the price move down to this $1.30 mark and then potentially get some sort of bounce there? Because there's been a history of bounces. So let's see how this all unfolded. One thing to keep in mind, DPW that we just looked at, that was 37 cents, right? Now we're looking at a stock that's up over $1. So you're starting to see the price range. It's not like it's all penny stocks or anything like that. I will cover penny stocks, sure, but we've looked at one and now we're at something up over $1. So let's see how this one played out. Again, that green line down there was kind of the key focal point. So you can see the price started to work its way down there. And right there, hit that area and tried to bounce, but you can see got a couple little bounces right there, but never anything significant. And then, yeah, it broke to the downside. And assuming you were disciplined, assuming you followed the rules of a logical and wise trade plan, then yeah, you're looking at right around a 5% range. Technically speaking, probably more so around like 4.3%, because I was running the numbers. But I just rounded up to 5 to keep it, in case there was slippage or something like that. So right around negative 5%. So yeah, this was a losing alert. It is what it is. Like I said, nobody can be perfect. No scan can be perfect. But the key thing is risk management. So keep that in mind. Negative 5% by just being a disciplined trader. The next alert to look at here, NEOS. And the whole idea was, is this thing trying to bottom out? So mapped out the resistance trend line here. Pointed out, nice little candle there on the higher volume. So, could the price get the breakout of the trend line? Let's see how this one played out. So here we go. The week starts off, price gets up there, flirting right with that trend line. Another day of potential opportunity to hop in looking for the trend line break. So it took a little while, but then right there, price just absolutely made a very, very nice move. And that move right there, within just really less than 2 weeks, 29.2%. Now, I'm not saying anybody played it perfectly or anything like that, but let's say you screwed up half the trade. So you screwed up half the trade, you're still looking at, we'll just call it 14%. So think about that. We just looked at a negative 5%, and then here we're assuming that you screwed up half the trade, yet you still made 14%. So right there, 14% minus 5%, you're still up green now because you were disciplined. And once more, that is assuming you screwed up half the trade. It would not be unreasonable at all to think that somebody could have made 20% on this, right? But we're just going to go with 14% because you screwed up half the trade. And just like that, because you were disciplined on the previous one and just kept it at a 5% loss, you're already in the green. But now the question becomes, can we get kind of any little additional cherries on top? So let's see how this played out. But hopefully you really see the power of risk management, risk control, being disciplined. This is what happens in the real world. Real world, losses happen. Nobody can, ever avoid or ever have a perfect track record. But the question becomes, are you keeping those losses disciplined? Do you have a trade plan that's going to keep everything under control from the risk perspective? Because here, yeah, nobody wants to take a loss, but negative 5% and boom, just like that, potential at 14%, 20%, 25%. Yeah, it happened with this one in that very same week. Now, the final portion of the newsletter is for people that have gone through the classes that I offer. So there's no images or anything like that because people have the knowledge. People have been taught the strategies in the process. So really all they need to know is a little helping hand of, hey, these are some ticker symbols that could be of interest. Kind of like if you were fishing at a pond, it's just my way of saying, hey, there might be some fish over there. But that's all I do is I just direct their attention. But because they know what they're doing, they have the knowledge and they have the strategies, they know how to take that and then go over there and catch the fish all on their own. So that's the idea here is just, people have that knowledge. So the first is that I always like to talk about is shorting. Shorting just means, real quick, if you're not familiar, if a price goes down, you make money. If that's the first time you've ever heard that, yeah, your mind is probably like, wait, what? But it's pretty amazing when you first hear about it, and it's a great function that the market provides. So again, all shorting means is that if a price goes down, that means you make money. So with that being said, I'm going to just take a look at one of these here, HPE, as a little FYI. This was a small little winner, nothing to really be that. And then this would have been, there's just never any. So that would have been a no play on that one. But we're going to look here at HPE. So this was the alert and when it was sent out. And I'm going to go through this relatively quickly. So nice little fake break right there. And then you can see the price starts to roll over. Rolls over some more. Remember, we want to see prices going down. That's a good thing from the short side. Rolls over some more, and then a nasty gap down right there and went down even further. So as of right now, it's made a move in the downside of 17.3%. Again, did anybody play it perfectly? So let's just say, it worked out to 8%. 8% for, we'll just call it a month. Again, that's 8%. Think about it. Or you can go and get 3% for 1 year at those bank CD rates. So, from that point of view, 8%. But keep in mind, this is all within the context of already being green on the week because we had the 29% winner, kept it small with the 5% loser. So, like I said, just a nice little cherry on top here. And then the final one we'll look at is from, again, the same premise. This is just people armed with knowledge in classes, but we're going to look at RAD from the trampoline setup strategy. So let's see how this one played out. So there's a chart when the alert was, or when the newsletter was sent out. So let's see how this one played out. Didn't waste too much time. Started to work its way upwards. Little consolidation right there. Came back to life. And then made the move up to there. It doesn't look like a whole lot distance-wise, but when you're talking about this price range, from where it was up to almost $10. Again, 24.5%. So let's just say you screwed up half the trade. You're looking at right there about 12%. So 12% in basically a week and a half. Is that like a massive, it's 100% winner? No, but let's keep things in perspective. Or you could go to your local bank and get 3% for 1 year. So I'm going to go with 12% in just a week and a half. But again, that also assumes that you screwed up half the trade. So overall, though, good solid wins. Nothing massive in terms of 100% moves like I know I've showed in past videos. But you can't always have those every single week. But from a very practical perspective, hopefully you see here that, money can still be made. But it all revolves around just keeping that disciplined, keeping those losses minimal. If you're interested in signing up and joining the community, then all you got to do is go to claytrader.com/team. Along with the newsletter, you also get a live chat room. So it's not just the newsletter. There's a live chat room where I am in there interactive and, live every day. And I give watch lists and I give, alerts as the day plays out. So there's lots more than just the email newsletter that I send out. And there is an app that comes with it. So it's not like you have to stay chained to your computer or anything like that. You can stay in touch no matter where you are. And as far as, the pricing is concerned, $99 as the most flexible. The number there that you really need to ask yourself and that it all revolves around is $8.25. And the question is, okay, do I think this service can help me make more than $8.25, not per day, but per week? If you think the service can help you make more than $8.25 per week, then you will get your money back and it'll be a good return on investment. Now, if you don't think it can help you make $8.25 per week, then don't do it. You'll lose money on the investment because, $8.25 is the break-even point. So if you do the math, that's what it comes down to. That's the question that you need to ask yourself. So $8.25, again, not per day, but per week. Do you think the service can help you make more than that? If you do, then it's a no-brainer. It would be a great investment. So, I'd love to have you join. And that, I look forward to getting to know you and working with you and all that. And I really do mean that because I am, like I said, very active in the chat room, very active in the community. So I try to get to know people as best as possible. So I would love to have you join. But that is another week in the book. So if anything, just remember, hopefully you take away the importance of risk management.